Stop what you're doing because the next few hours could decide Bitcoin's next multi-billion-dollar move, and almost nobody is looking at the real catalyst. While retail investors are still watching crypto headlines, Wall Street is watching something completely different. Today's U.S. jobs report, Treasury yields, and Federal Reserve expectations. Bitcoin is currently trading around the $65,000 level after reclaiming this key psychological resistance, supported by renewed institutional interest and improving ETF momentum. This isn't the same market we saw in 2021. Back then, Bitcoin rallies were driven by retail FOMO, leverage, and social media excitement. Today, institutions are driving price action through regulated spot ETFs, disciplined capital allocation, and macroeconomic positioning. Recent reporting continues to show that institutional demand has remained relatively resilient, while retail participation is still unusually weak, a major structural shift that changes how Bitcoin reacts to the economy. The biggest event today is the U.S. non-farm payrolls report, and it has already surprised markets with an unexpected decline of roughly 23,000 jobs. That immediately reduced expectations for another near-term Federal Reserve rate hike, pushing the probability of a September increase down from about 55% to 40%, sending Treasury yields lower and weakening the U.S. dollar. The 10-year Treasury yield has fallen to around 4.61%. creating a more supportive environment for risk assets, including Bitcoin. This matters because Bitcoin has increasingly become a liquidity-sensitive asset. When yields fall and the dollar weakens, financial conditions ease, capital becomes more willing to move into higher-risk assets, and Bitcoin often benefits alongside technology stocks. At the same time, gold has surged nearly 7% this week, showing that investors are repositioning across multiple asset classes after the softer labor data. Looking deeper into market structure, Bitcoin's resilience tells an important story. Despite months of cautious retail participation, institutions continue using regulated ETF products as their preferred way to gain exposure. That doesn't guarantee an immediate rally, but it suggests professional investors are still willing to accumulate during consolidation rather than abandoning the market. Recent community discussions also point to Bitcoin reclaiming the $65,000 area on the back of renewed spot ETF inflows, although trading volume has not yet fully confirmed a broad breakout. Ethereum, meanwhile, continues to lag behind Bitcoin. That's typical during the early phase of institutional accumulation, where capital often enters Bitcoin first before rotating into Ethereum and eventually into higher-risk altcoins if confidence improves. From a technical perspective, Bitcoin now faces its most important decision zone. Holding above $65,000 increases the probability of a move toward $68,000, with $70,000 becoming the next major psychological objective if momentum strengthens. On the downside, if macro conditions deteriorate or yields reverse higher, the first important support sits around $64,000, followed by the stronger institutional buying zone between $62,000 and $60,000. But price alone doesn't tell the full story. Professional investors are also watching ETF flows, bond markets, the US dollar, liquidity conditions, and corporate positioning, because those variables increasingly determine where institutional money moves next. Academic research published since the launch of spot Bitcoin ETFs also suggests Bitcoin's correlation with traditional financial markets has increased, reinforcing the idea that macroeconomic conditions now play a much larger role in price discovery than in previous crypto cycles. So what happens next? If today's softer labor data continues to lower bond yields and keep the dollar under pressure, Bitcoin could finally have the macro backdrop needed to sustain a breakout above $65,000 and target $68,000 to $70,000 over the coming weeks. If inflation or future economic data unexpectedly reverses that trend, expect higher volatility and another test of lower support before institutions step back in. The biggest opportunity in financial markets rarely appears after everyone agrees. It appears while uncertainty is still high and smart money is quietly positioning itself. If you want daily institutional quality analysis connecting Bitcoin, Ethereum, ETFs, Federal Reserve policy, Treasury yields, stocks, gold, and the global economy, subscribe to Market Pulse 360 because we don't just report the news. We explain why markets move, where institutional capital is flowing, and what to watch next.